Hello everyone. We have an amazing guest today. We have Amit Kumar from our Ventures. I had the pleasure of working with Amit when I used to be a VP at our Ventures a couple years back, and co- considering his background and the work that he's done over there, it's absolutely amazing. Now, obviously, most people in the startup ecosystem know his story. He's the one of the partners at our Ventures, along with Abhijit Kumar and Harshad Lahoti. And prior to that, he's worked with a lot of startup companies as well. In fact, worked with a Series Beast funded company as well. So rather than stealing the thunder, I will let Amit to kind of give us more details, about what he's worked for in the past.
Hey Harsh, thank you very much for inviting me to the podcast. I think podcast करने में मेरे को बहुत मजा आता है, and that is what is very evident because I just speak from the heart when I have a podcast. So a very short introduction. Qualified as a CA in 2000. In 2002, started working into a management consulting company. Started my own business. Did for a while. Uh, I wouldn't say for a while, for about 10 years. And then the startup ecosystem bug actually bit me in 2014 when a couple of my friends were starting up, and I was part of the founding team of a B2B e-commerce startup. No prior experience of funding, something extremely new, and I love adventures, and I just jumped into it, became a CFO there, raised a lot of money. And in 2017, when there were troubled times, then jumped off the ship, and then Abhijit and Harshad are old friends of mine. So we decided that let's do one thing. Let's get on to making a fund, an angel fund. But COVID had other ideas in 2020, all of us know. So then we started off launching a fund in 2022. Till then, we built our ventures to where it is today to ensure that the angel fund is launched very smoothly. As of now, we've launched the angel fund and started deploying from January of 23. Uh, Currently deploying mostly in portfolio companies, but in new companies as well. And we will continue to do so. Just like our ventures, we do checks till about $500,000 in that. Although the initial checks may be smaller, but as time progresses, we will want to do more and more checks. I love the color red at a personal level. So I love red cars. I've been to a couple of Formula One races. Yes, I'm married and having a daughter who is now going to be 13 years old. And now I'm getting a little tensed because she is turning into a teenager.
So once उसमें तो एक अलग ही एनर्जी हो जाएगी फिर उस पॉइंट पे.
You can't even imagine. The first half an hour of the morning squeezes half a days of energy while I'm trying to wake her up.
करेक्ट करेक्ट एब्सोल्युटली. सो
Yeah.
आपने भी काफी वो इंटरेस्टिंग चीज बताई जो स्टार्टअप वर्क का, राइट? आई वेंट थ्रू दैट फेज माई सेल्फ ड्यूरिंग 2014. उस टाइम पे आई हैड अ कॉल फ्रॉम Amazon, but because I just joined Johnson & Johnson, I kind of did not take that. But when I got the opportunity to work with Paytm, I got grabbed that with both hands. And ironically, that was just before demonetization. So I saw the entire wave. कि demonetization कैसे हुआ Paytm में. I saw the entire wave, and you have been a part of that journey as well. So I'm sure you can
Yeah.
relate as well. So tell me a bit about that experience, working with that startup. What was the energy like? Because considering in the early stage, you conventional CA, conventional business, to all of us, startup energy. What was that like?
All right. So to set the record straight, fortunately, I was not a conventional CA. I have not done any tax practice. मुझे honestly tax इतना समझ में आता भी नहीं है when it comes to hardcore taxation. Uh, s- I did management consulting. I did risk management. I did compliance audits for a lot of large companies, which also helps me to understand their taxation, whether it is domestic and international a bit. Uh, but startup is a completely different story altogether. And the beauty is that it just widens your horizon like anything, uh, which I call it as a zillion years of experience in 2 years. One, the biggest learning for me when I walked into the startup ecosystem, you have yourself jumped into an ocean. Nobody has forced you to do that. Like management consulting, when I started working with a management consulting firm, my boss put me into an ocean and I had to learn to swim, and that was the beauty of it. Startup ecosystem, you have jumped into the ocean and now you have to learn because anyways you are a CXO as soon as you have actually gone into a startup. Now, having said that, which also showed me one important thing, that adventure always yields great results, if not from success basis, but from learning perspective. So what happens if you are in a startup and it does not do too well? You are still valued a lot because then you know what not to do in your next business or what you are trying to actually do. Third, and the most important thing which I figured out was that thinking big is something which the startup ecosystem teaches you. You come from a humble background, although your family may be having decent money, but as Indians, sometimes, or I would say not sometimes, but always we are conservative. We have been taught to think conservatively. And then suddenly you come, people just start talking about 10 million, 20 million, $100 million, $1 billion valuation. Initially, you first have to calculate $1 billion hota kitna hai. And that is what the startup ecosystem typically does to you. So it teaches you to be adventurous. I think take great amount of risks, widens your horizon in a very, very big manner. And most importantly, it helps you to think big. And if you can think big, then only you can achieve it. It is as simple as that.
Got it, absolutely. And even for me, right, I started my first startup in 2017, right? After I quit Paytm. It was a completely tumultuous experience because now I'm accountable for everyone. So in a corporate setting, what happens is you have other people, teammates, etc. थोड़ा उनके सहारे काम आगे बढ़ जाता है. Now you are the whole and sole answerable person over here. तो वो जो accountability आती है, that changes you a lot. So that gave me a lot of experience myself. And then the opportunity came with you guys, to join you guys as a VP. That was a
Yeah.
completely different experience for me as well, because that VP program kind of taught me the fundamental of investing. And now when I joined the VP program of you guys, I realized that myself, if I had to invest in my own company, I would not have done it. So because I started looking at companies from a different lens altogether. So did something like that happen to you as well when you started, investing into companies, etc.?
Uh, I think although I joined Aventures in 2018 and we launched the fund in 21-22, I started investing about 2.5 years ago, if I'm not mistaken.
Okay.
And the whole idea of investing is only for creation of wealth. So if you have to create wealth, you can invest. By saving, you can never become rich. That is one funda that is there. But since I was associated with the startup ecosystem from 2014 onwards, I don't think so I had any comms about taking risks, as I said. I invest simply thinking that this is going to be an expense and not an investment. So mentally, you have to write it off because you never know which startup will do well, which wouldn't do well. And that also is going to be full of surprises some days. You must have thought that X startup will do extremely well, and Y wouldn't do so well. The reverse is just going to happen. And that is what I have encountered. But the best part is people say that there is too much madness in the startup ecosystem. There is no science to it. But that is not the case. If there is madness, there has to be a method to madness. You have to take a portfolio approach. If you invest only in 2 or 3 startups, then you are taking extremely high risk. And if 2 out of the 3 startups become successful, you are hyper lucky. I think you should be considered a very lucky person if 2 on 3 startups succeed. Because more often than not, if you have 10 to 15 startups, you can safely assume that 40-50% startups will not see the light of the day after some time. 1 or 2 will do reasonably well, but 1 or 2 may be multi-baggers if you're investing in 12 to 15 startups. So like any asset class, startup investing is also just the same. If you have to make profits in the startup ecosystem, you have to build a portfolio. Do not try to put all eggs in the same basket, or else if the basket falls, then all eggs are going to break.
That's very insightful, because I typically, I come from a typical Gujarati family, and in most Mumbai, they typically prefer to invest in share markets, right? So the number of question I even asked with this to Mahavir ji in my earlier podcast as well. He told me I asked him a very, very simple question. These guys, they like to invest in the stock markets. उसमें क्या होता है, the market is extremely liquid. They can square off the losses anytime and kind of get out, right? So they don't understand the startup concept where the liquidity is blocked. You won't get exit opportunities that easily. So how do you kind of convince them at a time when, especially last year, people have made like 15%, 20% IRR returns just in the stock market? Then how do you explain and justify regular angel investors to take risk for a startup?
Very simple. I think whenever, in fact, there is also an angel investing masterclass or a workshop that I do for people who have not been investing. So I categorize angel investors into two. One, people who have been doing angel investing, so they understand the nuances, the plus and minuses of angel investing. Second are the first time angel investors. But let us not forget that they are finally investors because everybody invests somewhere or the other. Now, what are the traditional asset classes? You have real estate, you have stock market, like you said, there is gold, then there are fixed deposits, Then some people invest in paintings. Some invest also just not in houses or offices, but also land also. So that is one important real estate investment that typically people do. Now, over a period of time, if you have kind of exhausted all these, and you want also that there has to be an asset class which just can give you a 15% IRR annualized compounded basis, then you will need to find out an asset class which is going to give you exponential returns. So angel investors in the first place, heart in heart, always want a 4x, 5x, 10x, 15x. But if you ask them and talk to them, say, yeah, 30% is also fine. But they are not going to be happy with 30% because it is one of the riskiest asset classes angel investing is. And once somebody is trying to get only 30%, they're not going to be happy with it. Although across the world, the average is about 24 to 28% with a holding period of about 4 to 6 years, which also means that this is for the long term and it is not some magic that is going to happen. So we tell people, if you want to make exponential returns, then you have to do a high risk, high rate return game, and do not invest too much also into startups. So example could be, if you have got 100 rupees to invest, then you can start with maybe 10 rupees. And when I say 100 rupees to invest, not liquid funds, these are investable funds. So if you have got 100 bucks, start only with 10 rupees, start investing slowly, invest in about, say, as I said, 12 to 15 or 10 to 12 startups over a period of 2 to 3 years, so that you are just not jumping into the game thinking it is very adventurous, it is great, everybody is doing it. And please do not invest out of FOMO. That is one humble request to all the investors. Harsh is doing, Amit is doing, so I should also do it, or I am going to be missing something great. That is something that should not ever be done.
Absolutely. And that is what we are seeing. We are still, the startup ecosystem is paying the price for that, right? The FOMO of 2020 and
Yeah.
2021, the ecosystem is still paying the price. And, early investors, angel investors especially, they are very hesitant to kind of get in the market right now. So one of the major reasons which I kind of tell to early investors is that your conventional business is highly unlikely it's going to give you like, 30%, 40%, 50% returns year on year. This is the only investment class, even though it's highly risky, this is the only investment class that you have that potential. That is something which you can potentially explore, that put as you
Yeah.
point out, 10% of that to kind of have this opportunity to get the bigger upside, so that growth can also be taken care of. So can you help me understand this transition, right, from our ventures to the our angel fund, right? What has changed in terms of how are you evaluating startups, or how the dynamics of the operations वो कैसे बदल गया है उसमें, थोड़ा अगर आप आइडिया दे सके तो.
See, our ventures as sir is an angel investment network. So you have investors on one side and you have startups on the other. Startups come and pitch to us. We curate the startup. So people think that it's a platform. So anybody can just come and register their startups and then they can get funded on the network. No, it doesn't work like that. There is a curation process. 3 to 4 layer curation happens. Once that curation happens, it goes to the network. People go and speak to the founders. Some people may have multiple calls. It's not necessary that people may just understand in 10 minutes or 15 minutes time whether to invest a 5-10 lakh in a startup. They should dive deeper into the understanding and the business model, and most importantly the founder, and develop complete understanding before an investment is made. So how the network and fund is different. In the network, every investor who is investing will come on the cap table of the startup. So if there are 30, 40, 50 people investing 5 lakh rupees each, making it 2.5 crore investment, everybody will get individual shares of that particular startup and they're on the cap table. So operationally, obviously doesn't really change a lot for the investor because he doesn't really matter. The only difference being that he now has to speak to maybe 10 startups because he invested in 10 startups. Now that's the issue here. From a founder's perspective, he has to deal with 50 investors. So that is where the difference is. From our perspective, since we have anyways facilitated the deal, whether we do it from the network or through the angel fund, it just remains the same because we have to be in touch with the investors for talking to them, giving them support in terms of exit or maybe updates about business. And from the founder's perspective, we still have to be in touch with the founders to take the updates from them collate everything. There is a team which manages all these operational areas and then passes on the updates to all the investors. Angel fund is a category 1 SEBI registered AIF, so which means that it is regulated entity. Now, when it is a regulated entity, if you are doing good work in the network, you will do the same good work in the fund also. The only difference is that you need to keep on having regular updates and your returns, etc., and your information that needs to be filed with the regulator on a consistent basis. So if you have done an investment, you need to file the term sheet of the same within a specified period of time. Every quarter, you have to give a quarterly activity report to the regulator, whether in terms of how many investors or contributors do you have, in how many startups you have put, and frequently also, you, depending upon how things pan out, you also have to get valuations done of the startups and keep it for themselves, so that if the regulator ever asks for it, you can then say that yes, we are complying. And anyways, in that returns, etc., the annual return also, or annual report, you have to then declare that we have done the valuation of XY startup, and what is the current valuation of that investment that the investors have already done. Now, the advantage of investing through an AIF vis-a-vis the network is pretty simple, breaking up again into two parts. One is that for the investors, the best part is they don't need to tackle with 10, 15, 20 startups. They only need to talk to me. So which really helps, because if he needs any update, etc., there's only one point of contact. They can write to us, they can call us, and we will give them all the information. They get regular updates from us only. They don't really need to go to the entire ecosystem of their startups, telling them every quarter, oh, the update has not come, etc. No, we proactively do it on our own, because it is a part of our offering when you are running an AIF. And I think third most important thing for the investor is they get to stay invested for a longer period of time. And I would like to elaborate a little bit here. If you're an individual investor and an institutional investor later on comes in, they generally want a leaner, cleaner cap table. They don't like a crowded or a cluttered cap table. So they will ask the angel investors to generally exit, or they will encourage the founder to make them exit so that he can have a cleaner cap table. Now, in that case, us as angel investors and our network, people will have to then exit. Whether you get a 2x, 2.5x, 3x is dependent upon how much time we have spent in the investment. Now, when there is an AIF, it is already an institution and there is only single entry on the cap table, right? So the founder doesn't also have to really think a lot. And investors, the institutional one, when they come in, they really don't mind, okay, there is an AIF anyways. And we also get an opportunity in an AIF to contribute and invest again in the next round also, along with the new incoming investor. So the chances of we getting higher multiple also increases manifold if you are doing through an AIF. For the founder, operationally, I think it is a win-win situation. They don't need to really speak to 50 investors, answer queries. I wouldn't use the word entertain, but really operationally jeopardize himself by doing such things. So investor relations, the work drastically reduces. He only has to speak to the AIF manager, and things become much easier, whether any kind of negotiation, etc., takes place. So for us, the transition has been that we do work still in the network and also through the fund. But the advantage is we have the best of both worlds. So any investor who qualifies to be an angel investor can join the AIF, and people who do not qualify or do not wish to invest a specific amount of money, which is like 25 lakhs over a 5-year period, then they can join the network and they can invest in startups.
Got it. Very interesting. So can you also help me understand, what the investment criteria have changed, for an angel network? Are you doing it separately? Okay, the criteria pretty much the same.
So most of the time, there is a possibility that deals which are on the angel network will also go to the fund, because the curation has been done accordingly. And the beauty of the angel fund also is that for every investment, anyways, you have to take the approval of each investor. It's not that the investment manager can invest in any startup. You have taken an X amount of money from, say, Harsh, and then investing, because blind pooling, as they call, this is the specific term, is not allowed in the angel fund. So anyways, I have to present a proper note to my investment committee, a proper note to the investors, arrange for a call. In this case, this may be a group call of all the fund investors with a specific startup, have a deep dive session as well. So I don't think so from an operational angle, something has reduced. No, it still remains the same.
Other it
We
has
will still
increased.
follow the same process. Absolutely. But portfolio companies, wherein now they're raising the next round, they may not want to take smaller checks. they may want to only take a check which is like minimum of 25 or 50 lakhs. So from the AIF, the minimum you can do is 25 lakhs. And on the network, if you ever want to invest, you can do as low as 5 lakhs also. But the startup founder may not be ready because he still wants to have a leaner and a cleaner cap table.
Got it. Makes sense. So, आपने ये जो check size बताया, right, from 25 lakhs to 50 lakhs, I'm assuming this will be more suited towards seed stage company, right? Not at the more mature, like pre-series A, series A, not at that stage.
It can be, and the reason is because if it is already a portfolio company, you are just putting in a small check to just a follow-on round to ensure that you're backing the same jockey or the same horse. And that is what one should definitely do when it is investment. In capital markets also, when the price is going high, we definitely keep purchasing so that the average price generally becomes lower for us. So in this we do that. But obviously for first time companies doing it, we may do a 50 lakhs and a 1 crore check also from the AIF. There is no harm because there is some money that may be raised from the network as well and from the fund as well. So in the same deal, there is a possibility that a check from the network is also coming, or individual investors are also investing from the network, and the AIF is also participating.
Got it. So can you highlight some of the major areas which you look at when you want to invest, right? Whether it is category wise or sector wise or revenue numbers, anything specific that you have in mind which you look at?
Yeah, from a sector perspective, I think we have been agnostic completely, and I call ourselves every investor early stage should be an opportunity. If you get a good deal, you should simply invest. But typically, we follow the 3P principle. 50% weightage is given to the first P, which is with the people. I think initially, early stage investment, it is lot dependent upon the person or the promoter who has actually started the company and the team that is associated of the founders, and maybe the founders minus one as well. So 50% weightage is given to them, and not the fact that what have they done in the past or from which college or institution they are from, but at least more importantly, the expertise or deep domain knowledge they must be having of a particular sector. That really helps a lot. And if they work in a larger organization, the advantage is they have learned the nuances of how they will manage an organization when their own organization or startup really actually grows. But important to also notice that the business plan that they have submitted to us is something which needs to be ascertained whether they will be able to achieve that business plan or not, or the targets that they have set in the business plan or not. So that is why we give a lot of impetus to the team, the people, the first P, which is 50%. The next 30% is on the product. Now, product can be anything, it can be a service, etc. And whenever we are evaluating a product, either we use the product, as we say, I taste or test the product. So like we invested in an alcohol company, or if you invest in a mithai company, like the founders will sell us, they will sell us or send us samples. So the sample will come, I will make them taste to my family and friends and take feedback. And when we are confident that yeah, we have liked it, because मिठाई तो हम सब खाते हैं, तो अगर मिठाई अच्छी लग गई है, लग रहा है कि this is going to be really well, we will do it. And if the alcoholic drink is nice, it is refreshing, you think that the market is right for that, then that is the decision we take. If it is an app or a service that people have launched, then we obviously test it. Test it from a user's perspective. So if somebody, an e-commerce company recently came and said that, okay, I'm going to be sending you something, I said, don't send. I will order myself. The reason is because if I'm going to be ordering from your website or app, then I will understand what kind of execution capabilities do you have. You are saying the goods will be delivered in 2 to 3 days time. Are they getting delivered? What is the packaging? So these are the things which you can only test by doing it yourself. If he would send you something, he is going to ensure that
Best one.
nicely packed, the best of the things. No, we don't want something like that. So that is 30%. 20% is on potential, a potential to scale, because we all know that angel investors want exponential returns, and that can only happen if the business is going to scale faster than your traditional businesses, because people expect returns very fast. The gratification is instant in today's world. Like kids, when they play with iPads and phones, they want their apps to run really fast. And as investors, we know that although we want to be patient, but just I can ask you the same question. If I would tell you, okay, you have to wait for 4 or 5 years, you'll say, okay, I'll wait. Then you suddenly, after 1.5 2 years, you'll say, is there a possibility I'll get a faster exit? So yeah, if the scale is not there, it becomes a problem. So yeah, I follow the 50 30 20 rule in terms of people, product and potential.
Got it. Makes sense. Any specific, any specific categories or specific use cases which you're bullish on, any specific opportunities which you think, that at this point of time in 2024, this could be something very interesting 3, 5 years down the line, which, potential
Uh,
problems can be solved.
Yeah, healthcare, I think extremely bullish. And healthcare, when I say I'm not about services, but I think wearables, devices is something we're extremely bullish on. We have been also investing and evaluating startups in that area. This has happened because during the pandemic, a clear mirror was shown to us that whether it is our health or the healthcare system, it can crumble anytime. And we need to take good care of our health. So diagnostics is something which is going to be pretty well, I think, in the next 4 to 3 to 5 years. And when I say diagnostics, I'm not talking about, say, the metro cities, because metro cities, people are a little more aware and they're more careful about their health. So they get their test and all, they get it done pretty regularly. But tier 2, 3 towns, rural India, diagnostic services in rural India does not actually exist.
Exactly.
So that is something which needs to be taken care of, and quite a few companies are working on them. We have also invested in one of them very recently. Then I think D2C we are still extremely bullish on, and I think a lot of investors again very bullish on the D2C sector. It is not about the fact that only large companies can do good D2C brands or FMCG brands. I think now we've seen there's enough potential for small brands to become big brands and do their IPOs, etc., also over a period of time. So that will continue to happen. And everybody likes good quality at a cheaper price. It's not necessary that good quality can only come at a premium price, but there's market for every FMCG or D2C product in the country. And the market is pretty massive in that case. Third, I think ESG, it's not that we are very intrinsically looking into it, but I think it's important that we take care of our environment, whether it is in terms of sustainability, EVs, climate tech, agriculture in terms of agri-tech, also doing things in a more greener fashion. Now, yesterday I got a proposal or a deck for the agri equipments being run on electricity, because the farms are now not going to be using certain equipment with diesel, because obviously there's a lot of pollution, fumes, etc., which can harm the crops. So it is important that these are also areas which need to be taken care of, and the green to become greener. That's the new thing that is also doing the rounds, obviously, in terms of the investments that we are planning to do. And I think fintech is one area which still, in terms of penetration, when it comes to lending and financial inclusion, is something which we will keep looking at. Recently, also, we've got a couple of fintech proposals. And I think everybody's understood that if any fintech has to make money, you have to get into the business of lending.
Yes.
Uh, so, so, so these are the four areas we are extremely bullish on, and I think mostly covers all, which will do pretty well in the next 3 to 5 years.
Makes sense. Especially the healthcare and the clean tech, green tech part. Especially, with my work with World Trade Center Pune, right? We kind of
Yeah.
see the importance over there is in the healthcare space. The kind of amazing startups which we've already done, we are working with right now, and the constant decks that we see over there, and also in the clean tech and the waste management side, right? The amount of
Yeah.
potential there, the opportunity there, and with the climate crisis going on, right? Mumbai is already touching 40 degrees, 38 to 40 degrees already. So it's only, it's not even May. We haven't even started May yet. So that kind of gives me the, a lot of fear that we need to kind of fix this problem very quickly. And that's why, these sectors I definitely see a lot of, importance. So, in the end, to kind of summarize this discussion, it was an extremely fruitful discussion. Thank you so much for taking your time out for, for sharing your thoughts. What do you think, the ecosystem is going to be in the coming, next 2, 3 years, the impact of elections and, which are going to be in the startup ecosystem. We've seen that the current government has done a lot for the ecosystem over the last decade. What do you think the current elections would have the impact on that? And any personal projects which you would like to share to the community over here?
So I honestly feel that elections are just away. That's a couple of months. April and May elections will happen. The June the results will come out. And the best part is that even if the elections are the government is working extremely hard round the clock. And I completely love it the way they are doing it. It's not that the elections are coming now, work has stopped with the startup ecosystem, or whether any of these politicians or folks have slowed down and only focusing on winning the elections. No, the work is going on continuously, and you could also see, the startup Mahakumbh that happened this particular month, and I think drew amazing crowds. Great event. I could not attend it because of my personal engagements, but people who had gone there, in fact, a couple of our portfolio companies went there. They have been doing a great job. This is only one part of it. I think just giving that impetus and the confidence to the startup ecosystem that yes, the government is very nicely looking after this ecosystem and ensuring that now the regulations are getting better, the ease of doing business, the ranks are increasing or going up by the day. I think they are doing a great job with that, and I'm sure that after the elections, this will uh, just take more pace. It will pick up more pace, and investments will also happen in a much faster pace. A comparison to what happened in 2023-24, I think it's not so bad. It's done a good job in terms of our investments also. So the first quarter we saw good investments. Now the new financial year is just ushered, so I'm sure that people will start again investing, because whatever exhaustion of their investments had to happened by 31st of March, and people have a certain corpus that they keep for investing, whether they are the normal retail investors or the funds, etc. Now fresh allocations will start, and I don't think so people are really going to wait that okay, let's wait for the elections. You see the capital markets again, 1st of April was fantastic. Today is a typically a little flat, but that's how the name of the game is. But yes, I see a lot of bullish approach from across the ecosystem. People will keep investing, and I feel if even if the government does a lot good in terms of the capital markets, people, if they make money in the capital markets, will again book profits there and keep investing in the startup ecosystem, because you have to earn somewhere to invest into the ecosystem. Is as simple as that, and that is definitely going to continue. And I feel there are more and more SOPs and new policies changes, and new schemes will be launched from the government side. Maybe you can see a new fund of funds that is going to be coming up. You never know. And more importantly, I think the only request I would have, and I've been saying this across my podcast, is that let us get some parity in terms of capital gains when it comes to listed versus unlisted securities. If we have that parity, then more and more investors will come and invest, and reduce maybe the capital gains holding period also for unlisted securities from 2 years to about 1 year, like it is uh, for capital market or listed securities. So that will be helpful. So maybe after the election, somebody hears this podcast and again see this guy is requesting again and again. So let us bring parity. More than happy. I think the investors will be excited if something like that happens.
Thank you so much, Amit, for all those insights. Really helpful. If anyone wants to reach out to you, how can they reach out to you?
Or the best part is just write an email. The email is very simple. Amit@ahventures.fund. That's my email ID. And just write an email. And more often than not, I will not miss an email. There will be a delayed reply, but yes, I will definitely reply to an email, or some action on the email will definitely be taken.
Awesome. Thank you so much, Amit, for taking the time out. And I'm extremely glad that you've accepted the invite for my fundraising event next month as well. Looking forward to hosting
Absolutely.
there, and keep on supporting the startup ecosystem with your work. Hopefully, we can do a lot more collaborations in the future.
Thank you so much, Harsh. It's been a pleasure, and all the best you are doing. I think the great work that the WTC is doing along with in your leadership, I think it'll do really well. And look forward to working on that as well. We still have to catch up on that separately and see how we can collaborate on the same.
Absolutely, absolutely. Thank you so much, Amit. Looking forward to discuss further. Thank you. Take care. Bye bye.